Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from US Gold Corp. Please note you can submit questions in the box to the left of the slides. You can also view company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Luke Norman, Executive Chairman and Co-founder of US Gold, which trades on the Nasdaq under the symbol USAU. Welcome, Luke.
Thank you, and thank you for everyone who are taking their time collectively to listen to our presentation today. Right, so as the head slide indicates, we are heading towards becoming a copper and gold producer in the state of Wyoming. Why do I think that's an important reason to be listed on Nasdaq, us as a company, and wanting to move this project forward? I think that gold and copper are both very integral and important aspects to not just the present, but the future of the US. Gold is an investment portal, and copper, obviously, to support the electrification plans moving forward in the automotive industry. So we're very unique from the standpoint that we are one of the few companies ready to go with a brand new bucket-ready project. I'll just skip past the forward-looking statements. Sorry, you'll find these on our website. I'll give you all the information for our website. You can also see our website on the bottom of the slides as we click through. Right, so we are a pre-developer and explorer for gold and copper in the US. We highlight two particular states in particular, Wyoming and Nevada. Also, we have an exploration project in Idaho as well. We offer a lot of value right now because we're very advanced on our development of our copper gold mine called the CK Gold Project, just outside of Cheyenne, Wyoming. Plus, we have a very large exploration project where we are exploring for gold, not actively at this moment, in central Nevada. Right, so as mentioned on the introduction, we are listed on Nasdaq. That's not a usual platform for the junior mining space. Quite more often, these companies are listed in Canada on the Toronto Stock Exchange, but in this case, we felt it applicable to list ourselves on Nasdaq because, of course, our assets being US-based. 90% of our management team being US based. So we have a very unique share structure in that regard. 9 million shares outstanding. We currently trade with approximately a $35 million US market cap. We have a very normal share structure from every standpoint you can imagine. Right, so our opportunity as it stands right now, we've got the CK Gold Project where we're advancing, exploring, and moving towards full development. It's in a very mining-friendly state that's in Wyoming, of course. The beauty of Wyoming, we deal with state government. We have no federal exposure on this project, and that's very key to us as a company. You're finding throughout North America, Mexico into Canada, that dealing with federal agencies and bureaucracies has become a real challenge in the mining industry. Everybody wants their goods, but they don't seem to want the goods being dug in a hole, nearby them. While this is a very clean mining operation, we'll go so far as to call it a green mining operation. I'll get into greater detail on that in a moment. But so working with the state of Wyoming has been just wonderful for us as a company. 3 years into the permitting process, and here we are on the doorstep of receiving permits. We also, what we're developing, is 1 million ounces of proven probable gold and 248 million pounds of copper. And I'll get into some of the economics of that in a little bit. But we have permits, as I said, planned and filed. Nevada, Keystone, probably won't get deep into that today, but it's a massive opportunity for us as a company as well. Right, so we'll get into the CK Gold project, because clearly, again, that's a value proposition that I think everyone should be intrigued with today. So what we did is we took a project from about 3 years ago and decided to work it towards what's called a reserve, and framework that reserve into a feasibility study, and take that feasibility and use that for application for permit to mine this project. So really, it's a snapshot in time of our the economic forecast on this project. The way we see it, however, there's a lot more upside to this project, but we wanted to be able to prove to the marketplace that this could be permitted and built ultimately. So it's about a 1.5 million ounce gold equivalent reserve. That's going to generate about 100 to 110,000 ounces of gold equivalent production. Now, when I use the term gold equivalent, it's simply because the economics of this deposit factor out to around 70% of the value in gold and 30% of the value in copper. I do, however, as a side note, think that the value of copper is going to increase quite a bit through the year 2024, and I feel the same for gold. So a lot of mineral resource expansion, so a lot of upside to this deposit. Again, all we did was framework to sort of a 10-year mine life so that we could move ahead with the permit process. One of the key takeaways from that was what we call in the mining industry an all-in sustaining cost, or AISC. The all-in sustaining cost in our report came out at about $800 of an ounce cost. So basically, the cost base for us to draw each ounce out of the ground is about $800. And gold is trading at around $2,000 an ounce right now. So a tremendous margin relative to our peer group. This is considered a very low cost production. Again, relative to the cluster of peers that are in this space. And the reason why is very low strip ratio on the mine, which I will again get to in an upcoming slide. Right, so the reason why we can afford such a good margin on our project is its location. And of course, location, as with any form of real estate, location. Well, our project is sitting 20 miles, as you can see on this slide, 20 miles due west of Cheyenne, Wyoming. And to give you further clarification, Cheyenne here sits north of Denver. It's about an hour and 15 drive from Denver International Airport to get to Cheyenne. Cheyenne is the capital city of Wyoming, so that hosts the governor, plus the Department of Environmental Qualities, Land Quality Division, whom we deal with through the permit process, etc. So we're dealing with government that's 20 miles away from our project. We're in the hub of sort of that I-80 corridor, so close to a lot of mining infrastructure. Again, being so close to town, we don't need to build man camps for this project. We have basically a bucket-ready project, as I used earlier. And what that means is, or shovel-ready if you prefer, but it's ready to go. The deposit's there at surface. We just need to finalize our permitting. Now, another thing that gives us comfort with our plans to permit, and should be also of ease or comfort to investors or potential investors, is our location here. We're just sitting 3 miles north of Martin Marietta, who are operating a current open pit quarry. What they are generating, however, is just pure aggregates. So the difference being their granite body is just a pure aggregate source. Our granite body hosts 1.5 million ounces gold equivalents of a combination of gold and copper. So a nice rich mineral system sitting within a very nice granite package. And you can see in this pop out here a show of what our post-production pit will look like. That pit, about 80 acres at surface, 700 foot deep, in pure granite. So I'll touch on that in a moment as well, because there is some beneficial upside to that in the future. But yeah, very well located to Cheyenne and to Denver, very close to this I-80 corridor. It's a very good project. Here's the economics, as I kind of highlighted earlier. 1.44 million ounces gold equivalents. This report was released in December of 2021. So some of these numbers are stale dated. For example, this number here, this initial capex, that's the cost to build the mine, get it up and running. The forecast on that, which was independently verified, with brand new equipment supplied out of the OEM providers, is probably has increased to around $250 million. We will be conducting a final bankable feasibility study off the once we've been awarded our permits, of course. But these numbers are all factored off of $1,625 gold and $3.25 copper. Well, gold's trading at around $2,000 an ounce, and copper's trading, headed back towards $4 a pound. So these numbers again will change. The AISC will go up slightly, but you're still looking at a very similar margin, sort of the all-in sustaining cost being slightly, less than half of the ounce of gold value. The deposit, as I said, also, we wanted to prove to the marketplace that this could be permitted. So instead of chasing the deposit to depth, because this mineralized section just continues to plunge to depth, and we also see further upside for it moving away laterally to the southeast, was to encapsulate a 10-year footprint of what this mine might look like and permit that. Again, those numbers are very favorable, but there is upside to this project, and mine life upside to this project should we choose to chase it in the future. I won't get too deep into these pre-feasibility highlights because we already touched on it, but you can see a net cash flow of $500 million, a net present value here of $323 million. For those of you who, of course, are not too familiar with the metals and mining space, a generalized rule of thumb, at our stage with a mineral reserve and pre-permits, generally we would be trading at about 0.4 to 0.6 of this NPV5 number. So, call it somewhere between 130 and 180 million dollars market cap would be normalized. Again, we have about a $35 million market cap right now. The reason for that disparity is because of it's a sector-wide issue right now. People are unsure that these projects are going to get permitted in the future. So we're going to deal with that disparity or that question hanging over our project in very near term. In fact, we're feeling quite confident that we will have our permits in hand in this first half of this year. So we look for a big shift in value around this number as we move closer or through permitting. But a very, very solid IRR, or internal rate of return, on this project. Right, so it's a very simple form of mining, and this is why we're not running into a lot of or any real objection to this project. It is really a glorified quarry. We go in, we harvest the rock through an open pit, we set aside our waste rock, and then we crush and grind the ore into a fine, sort of almost a sand, and then it runs through a flotation circuit. So when the flotation circuit basically captures the heavy metals in a foam, which is akin to a laundry detergent, that gets dried out and sold off or packaged and shipped off as a concentrate. So there's no cyanides, no leaching of minerals here. So no nefarious or dangerous chemicals being used anywhere in the process of this mine. Also, it's a low sulfidization project, so we're not seeing acid water drainage or any of the typical things that create concerns around a mining opportunity. It's again just a glorified quarry from its mining perspective. Very simple, bare bones methodology to it. Now, I did mention that our waste rock gets stacked on the side. It's something that we're going to look at in the future because our waste rock is, lo and behold, a very similar rock to what Martin Marietta are currently quarrying nearby us, and that's a valuable aggregate in the Colorado Front Range right now. So there is a potential for our waste rock to be a very valuable aggregate and clearly a big value add-on to our project in the future. Right, so the permitting in Wyoming, I do want to touch on this because it is key. We have a very hands-on approach in the state of Wyoming. We've dealt with everyone from the Nearby Parks Board to, you can see, the Business Alliance. We do a huge outreach program throughout Cheyenne and Laramie, who are the two most impacted by our plan to mine in this portion of Wyoming. And by impacted, I mean more from an economic standpoint. The environmental impact of this project is minimal. As I said, it's no different. It's very akin to just a aggregate quarry, but it does have a huge impact. There's a report done by the University of Wyoming on the local community. So we like to keep everyone abreast and aware of how we're going about things and how we're proceeding in the state. Another interesting aspect about this project, I don't want to drone on too long about it, but I mentioned earlier on the first slide, the location slide, that we end up with an 80-acre at surface, 700-foot deep pit. Well, that pit again sits in benign granites. We have a lake to our north. I'll just actually kick back to that slide one moment, actually. There we go. As you can see, with our project location and our hypothesized exhausted pit, it sits just to the north, or it sits just to the south, of these two water bodies here. Crystal Lake and Granite Lake. Those are man-made water reservoirs that feed the township of Cheyenne. Those reservoirs are under capacity for the growth that's occurring in and around Wyoming. So if I head back to this slide here, you'll see an outline of these two reservoirs. It is in the public domain, and the plan is to increase the dam height, and by proxy, that will flood these reservoirs. And these reservoirs are used right now as recreational facilities by both Cheyenne, Laramie, and beyond, the local communities. So it takes a lot of campsites and other, usable sources of recreation, bike paths, walking paths, etc. Their plan to increase this dam height. Our open pit, once mining is completed, would more than double the capacity and would not require this undertaking and would feed in downstream very nicely into these two water sources. So it's another contemplation around this project that just adds to its future positivity for the local community. We'll skip that. Right, so we're right in the final stages of permitting. We've completed all the advanced engineering that we need to put out a bankable feasibility post-permit. We are conducting aggregate market studies. We think that's going to be a huge value addition to this project in the future, but it's not taken into consideration in our current economic plan. We've got access to capital. I won't delve into that too deep today. There is the optionality of this post-production, this pit lake being used as a water storage facility. And ultimately, we are on the verge of a construction and production decision. Um, I'll touch very lightly, quickly here on Keystone. This is our big monster project in the portfolio. It used to be our flagship asset. However, we're focused in on the development, obviously, the CK Gold project. It sits 10 miles across trend or long trend from Barrick Gold Corp, or now Nevada Mining, is a massive opportunity here for us to find a huge endowment of gold. So it's a project that you want to keep your eyes on in the future, and we will be exploring it in the future. Right, so we'll wrap this up. I just want to touch on quickly, heck of a management team. So leading our charge throughout this sort of pre-production and our permitting phase, George B., our CEO. George comes from a background of building some of the biggest gold mining operations on the planet. He worked with the likes of Barrick Gold Corp, Kinross. He's built projects pretty much all over the world. Kevin Francis, VP of Exploration. Again, a very storied history in the mining space. Over to Eric Alexander, our CFO. So Michael Walkirch, who was a co-founder with me over at Gold Standard Ventures, our previous company. So Tara and Robert back up a heck of a team that know how to build projects, know how to conduct business and raise capital for these type of opportunities. Right, so I'm going to open this up to question and answer period, race through as quick as I could, and we'll see what we come up with. Lastly, this slide here will give you obviously our symbols and contact information. Right, so a question here just asking if I could speak to the permitting in Wyoming, whether it's more or less cumbersome than other jurisdictions. I would say it is no more or less cumbersome than any other jurisdiction, other than the fact that we are dealing with the state. We are not dealing with federal agencies. So when questions get asked and we answer them, it's a direct contact. Things move very quickly. I mean, they are just as concerned about the environment as any federal agency is, but we don't run into all the red tape and bureaucracy that we would face otherwise. There are states where it's impossible or damn near impossible to build a mine. Colorado is very quickly becoming a state like that. California also has a name as being somewhere where you can't build a mine, but no, Wyoming is a resource-friendly state, and it's been remarkable to date. Right. I just touched on the team. I was just asked to touch on that. Just a question here, if we've had any preliminary discussions with any companies that might be interested in taking over US Gold Corp, and the simple answer is yes. We would expect, obviously, a lot of interest in our company especially once we're permitted. But there has been a slew of interest in this company, and not just from traditional mining companies who are looking for other sources of production for gold and copper. We've had interest from non-traditional mining companies who see an opportunity here in the state of Wyoming, where there's a lot of money that can be made around this project. So we continue to see that, and it's compelling for us. Would we consider offtake or royalty or streaming agreements to fund our, call it $250 million capex? I think, we're open to all sorts of suggestions. Well, not suggestions, but all sorts of pathways that we could take to minimize the impact on our equity positions. So we don't want to obviously dilute the company and our shareholders in raising the capital to put this into production. So we are currently exploring all sorts of different sources of capital for sure. Right, question regarding when we receive permits, how much time will be needed before we actually build the mine? That's a question, that's almost how long is a piece of rope? And I don't mean to be so flippant about my response to that, but let's say we receive permits May 1st. Hypothetically, we could race out of the gates, go raise the capital, start building straight away. Let's say we received favorable terms by May 15th and started building. There's George mentions 18 months as a sort of time frame to get this built. However, we're in a market right now where we don't feel like we need to race out of the gates into building this project. We definitely want to explore the aggregates component or potential aggregates component of this project a little more and see if it's worth pursuing those. So there are other value adds to this project that I think we will take a look at. And at some juncture, it's about an 18-month build. Question here. Have we undertaken metallurgy tests for recoveries? Yes, Adrian, we've spent a lot of time on and continue to conduct metallurgical work, just looking to optimize recoveries. But our recoveries seem very good, upwards in the 70% range on gold, higher in copper. But yeah, optimization of recoveries, we're ongoing. But we're doing metallurgical work, not just on that, but around our tailings, our waste rock, our pit walls, etc. Because again, we really do foresee this becoming a viable solution to the local community for their reservoir network, etc. Okay, it says, at what point would an equity offering be necessary after all the permits have been issued? Well, an equity raise would be potentially a component of the CapEx requirement to build this project. How much equity we're going to require versus debt is an unknown. Traditionally, it's kind of a 70-30 debt equity ratio. I think on this project, we're going to be able to tighten those constraints on pure equity. So a couple of the points I didn't get into in my presentation, but this is a bucket ready or shovel ready project, as I mentioned earlier. What that means is from day dot, we're into ore. So our highest grade is coming out of the ground on the first kind of stage of production. So for us to want to forward sell some of that production to offset, raising equity through dilution is a viable option. So we're kind of excited about the different methodologies or different methods we have to access to capital. So, the project shapes up very nicely in that regard. Right. Well, it seems like I've answered all the questions that are there on the screen. So I'll hand back over to John.